Once you've done that, we can go into the dashboard directly, and the first two metrics that we see over here on the left that we're going to take a look at are our bank account posting group balances and subledger to general ledger balance checks. We like to start here because this is typically a key indicator if you are performing optimally in Business Central. Think of this as your check engine light. Just like you're taking your car regularly to the shop for a tune-up, you will likely want to check on this periodically. We recommend having this be part of your month-end checklist and your month-end close. So when it comes to the balance checks up top, cash is still king. This first metric will show you which GL account each bank account is tied to through its bank account posting group. As a general rule of thumb and best practice, each bank account should have a one-to-one relationship with its GL account. This makes it much easier to reconcile your accounts at month end and will also ensure that your bank account posting group balance, which should also be a one-to-one relationship with your bank accounts, ties out to the general ledger account that it's assigned to. If they are not, that likely means you've made entries directly to the general ledger when they should have been posted to through the bank account subledger. In just a few moments, we'll also show you how to identify accounts that have direct posting turned on, meaning that you are allowed to post directly to the GL, bypassing these subledgers, and also how to fix that moving forward. As a general rule of thumb, any account tied to a subledger posting group like bank account posting group, customer posting group, and vendor posting group, just to name a few, should have direct posting turned off. Luckily, everything's looking good here for the bank accounts, but as we get into our subledger to general ledger balance checks next, we will show you a few warnings to look into. Similar to the bank accounts, we also show if your subledgers and general ledgers tie out. All customer activity, for example, is tied to an AR account that can be found in their customer posting group. If these numbers here are out of balance, as we see they are, it likely means that someone posted directly to accounts receivable where the AR is not actually tied to a customer. This is, of course, a big no-no and will need to be resolved. Once resolved, you'll want to make sure that your allow direct posting is turned off in your AR GL account card. In this case, we can see, as mentioned, that AR does not tie out and inventory also needs a closer look. For AP, we also have our AP account tied to vendors and our bank account posting groups tied to our cash accounts and our bank accounts. Again, these both look good and don't need further action, but we would want to look further into our AR and our inventory. The next thing that we see over here on the right is our balance by bank account. This is crucial to ensure your cash positions are healthy, and in this case, we have both cash accounts and credit card accounts set up as bank accounts in the system. Here we can see that we have plenty of cash to cover our current credit card liabilities, but you also may need to take a more qualitative look at this based on the size of your business and the types of activities that you're doing. Next, we're going to scroll down and take a look at our customer aging and late payer indicators. If you remember from the setups we reviewed in the first video, this will look at both the average paydays of each individual customer and compare it to their payment terms. If the average paydays is greater than the terms, it will highlight them in red and flag them as a late payer. You can then filter by the average paydays, the late payer flag, or the balance. You can also drill into the balance to see which customer ledger entries make up the balance and even apply unapplied payments to invoices directly from this screen, as it's simply giving a glimpse into the out-of-box customer ledger entry table at this stage. Again, like I mentioned, you can filter and sort up and down. You can come in here and filter just to the late payer flags. Maybe we want to say that, yes, they are late payers. Again, all types of out-of-box filters and sorts are available here. Now, over to the right, we have some of our direct posting warnings that we talked about before. So as mentioned previously, if you have GL accounts that are being posted to through subledgers, you typically want direct posting turned off. Exceptions can be made for income statement accounts, as we see here. However, for any balance sheet accounts like your checking account that we see, we should definitely be turning direct posting off for these, as cash, in this case the checking account, should always be posted to via the bank account, and then the GL will automatically be triggered based on the bank account posting group setups that they're tied to. So let's scroll down a little bit more to our number series warnings. Again, if you remember the setups, we defined an indicator in the setup. In our case, it was 100. If we look at the first line, we see that the ending number is 1098 and the last number used was 1047. This is within the 100 digits, and therefore it is time to update our ending number. Otherwise, after creating about 50 more items in Business Central, it will no longer allow us to create new items in that auto numbering sequence, and it's going to flag us and warn us that we have to update this anyways. So again, another way to be proactive in the system, updating the numbers in your number series before they expire. Finally, let's scroll down to the very bottom, and we will see our ship not invoiced and old sales documents, as well as the same on our purchasing side for received not invoiced and old purchasing documents. For the received and ship not invoiced indicators, this is showing documents that were either sales documents that have been shipped, but the invoice has not been sent to the customer, or purchase orders that were received, but you did not receive the invoice from your vendor. All documents in this list need to be addressed because typically the longer they sit, received or shipped not invoiced, the harder it's going to be to maintain accruals and account for them correctly, as well as putting revenue and expenses into the right posting periods and maintaining inventory valuations. The final piece here is the old sales documents and old purchase documents. If you remember from our first video on the setups, here's where you can enter the date range. In my case, we had -CM, which means that it will not show anything created this month, but will show anything created last month or older. So this is a good way to quickly review and clean up old documents. You can, of course, also drill directly into the documents from this window. So if I wanted to see what this one was, I could go ahead and click on it, and it's going to drill into those sales lines, and you can even show the document from here. So at this point, you've run through the full accounting tab of the health check. We recommend running this on a regular basis, and many of our clients include this exercise as part of their month-end close and month-end checklist. By utilizing the health check, you can see here that in just a few minutes, you can run through all of your key accounting indicators and search for outliers. Hopefully you have a similar experience of going to the doctor each year and coming back with a clean bill of health, but if there are any indicators that you need help looking into, we would be more than happy to recommend a specialist that can take a closer look.